It's about that time of day again, folks. Welcome back to your Nightly Newsletter, boys and girls. Joseph James here. Wednesday evening, December 9th, 2015. Got another jam-packed newsletter in store for you. Hope you're having a great week. Boy, this volatility, I wish we had this volatility all year round. This is the best time of the year to be a trader. This last quarter of the year and the first quarter of next year, you got to love the volatility. In tonight's newsletter, big stuff to talk about tonight. Crude oil. The black gold is bearish after collapsing off today's high, and we finished the session with a trading range with a bearish bias, of course. That bearish bias is going to give us some great clues for the best selling opportunities on the oil market tomorrow. Stay tuned for more on that. The E-mini S&P, the E-mini, is bearish as well after it followed crude, tumbling off today's highs as well. We finished the session with a very nice and neat looking bear flag on the S&P. This bear flag tells us exactly where to look for the best selling opportunities tomorrow. Flags are a little bit complicated. We're going to talk a lot about those today. Gold, the yellow metal, also bearish after a strong push lower. And we finished the session with, another bear flag on the yellow metal on the way back to the lows from earlier this week. That flag, combined with the lows from Monday and Tuesday's session, they're going to give us some great opportunities here for the yellow metal tomorrow. I'll give you a hint. We'll be talking about that in a moment here. On the euro, the 6E is bullish this evening. But after three pushes higher in one session today, we expect those bulls to have to take some profit. They're going to have to take some chips off the table and allow the sellers to have their turn for the first half of tomorrow's session before we can look for additional buying opportunities. We got a bunch of levels to watch for all you euro traders out there tomorrow, so don't forget to keep tuned on to this video here. We'll cover that at the end. All right, guys, we got planned for crude, E-mini S&P, gold, and, of course, the euro. Before we get started, though, today's charts and strategies for tomorrow, I do want to remind you to make sure you're watching this video on our trading blog here at Sideways Markets. If you're watching the video on our YouTube channel, there's a link in the description of the video, and that'll take you over here to our blog. A couple reasons why. First of all, if you're not an advanced member here at School of Trade and you'd like to get a free pass, come out and attend our live trade room. You can see how we trade here every day. Grab your free pass, upper left-hand corner. Lower left-hand corner, you'll never have to miss another newsletter ever again. You can register for our newsletter mailing list. All I need is your name, your email address, and then make sure you verify your inbox. I'm going to send you your verification email, so check your inbox. Right below the video tonight, you'll see a spot to download all the charts in tonight's video. How nice is that? And then, of course, over on the right-hand side, you can register for our trial membership, not to be confused with your free pass. It is different. And, of course, membership information, member reviews, and we always have someone standing by 24/7 to answer any questions. Any questions, big or small, just grab that live support button on the right-hand side, and we'll be right there to help you guys out. All right? Are we ready to rock and roll? I hope so, because this train's pulling out of the station. Now, tomorrow's news, Thursday, December 10th, all we pretty much have tomorrow is that jobless claims report early in the morning, which is pretty much standard operating procedure for a Thursday morning. As you can see, then we're going to go all the way down until that Treasury budget at 2 o'clock. I rarely will enter into new positions in the afternoon session. I'm usually in my positions already by the time the morning has finished up. So most of us will not be affected by that 2 o'clock Treasury budget. But if you happen to be trading the afternoon session, batten down the hatches around 2 o'clock. So really a wide open space for us tomorrow. Not a lot to worry about as far as major news goes. And then we got some big news on Friday, which we'll talk about in tomorrow's newsletter. Starting off here on crude. Remember, we had that trading range high up here, right? Remember that trading range we were talking about? Yeah, like we said earlier, give them 2 tries, once, twice, and see ya, suckers. Double press off the high and fails right back down to the low. Now, surprise, surprise, surprise. How are we looking for tomorrow? Crude oil is bearish after collapsing off today's high, and we finished the session with a clear trading range, which gives us some great clues for the best opportunities to sell tomorrow. The most reliable opportunities will be selling tomorrow, shocker, and the best trade will be after buyers fail to push prices higher. Look for a break higher up to resistance, and then we're looking to sell into the stop losses of those buyers as they try to buy the next pullback. Couple things you see on this chart right now, obviously multi-trend, right? Trending's down, trending up, and then collapses right back down. Remember, news came out right about here, right? And it double pressed above yesterday's high and then just collapsed all the way back down. Very rarely will you see those two tries from the buyers. Remember, we talked about this in last night's newsletter. Give them 2 tries. If they can't keep it, you gotta fade it, and that's exactly what happened in today's session. A little bit late in the morning here for that. Now, of course, you can see we come collapsing back down, and then, of course, that leads into our trading range. So most important thing right now is it's definitely clear the bias is bearish. Okay, so we'll stay to the downside. This trading range is going to give us range expansions above and below. Okay, very big important clue. And you'll notice here that I've kind of anticipated where a measured move may be occurring. I can't predict the future, just like nobody can, but I know that typically on a big down move like that, you're going to see some profit taking. You're going to see the buyers try to play with this thing a little bit. And, I would expect to see a bullish measured correction back higher and then look for them to send it back lower. Basically, let's play that game. What if price goes higher? What if price goes lower? Right now, we're inside a range right now. So we're definitely looking for range rotation. Okay, I do notice we didn't test the low of that range. Right, so as of right now, we have missed rotation. So that tells me, they tried once, they tried twice to get to 36.93. You guys are experts on trading ranges, right? We talked about it yesterday. So they failed to get down to that 93. So that would tell me as long as they don't get lower before they go higher, this price is going to try to jump up here. Now, if it jumps up higher, I'm expecting the buyers to try to buy a pullback. That's where I'm going to look for them to fail. That's going to be the most reliable setup you're going to get tomorrow. Now, if it doesn't, if it just keeps rattling around inside, we're looking to sell each high. And do you recall from last night's newsletter what I talked about? What type of trade do we look for inside of a range? If you said failure, you're exactly correct, Looking for failures. So we're looking for buyers to go up to the highs, Really very similar to what we saw before, We saw it go up, they try it once, they try it twice, and they fail, You're selling back down. So that's what we're going to do. On a much faster time frame, though, of course, sell that high. If we go up, we expect buyers to want to buy that pullback. Again, they might be successful, for all I know, this price could go all the way up tomorrow and then come back down. But what I do know, though, is if we rotate inside the range, I want to sell the highs of the range. If we do push up, I'm looking for buyers to fail on the pullback. If we go lower, going lower is going to be the hard part, That's really going to be the hard part. What you want to do if we go lower is do not sell that breakdown. That's trade account suicide, Don't sell the lows. Remember that key component of day trading? This is kind of just good business. Buy the lows. Don't sell the lows, Sell high, buy low. Buy low, sell high. That's one of those real fundamental rules that seem to go out the window when we start looking at a trading chart. So if price goes lower, the last thing I want to do is sell. What I need to do is, as price goes lower, it'll run some stops. It'll make it look like it's going to keep going lower, Wait for it to break up and then sell into buyer failure. That's the safest way to do it. Bottom line, don't sell low, sell high. So you know the plan now for tomorrow, trying to get into a trade. And then depending on where we go with this, we'll be looking for a measured move back down. I've got the prior low of day at 36.64. We've got some significant support here at 36.42, 35.89. And again, I'm going to be looking closely to see how far we go up to make sure we make that measured move correctly tomorrow morning. Don't forget, trade room opens up at 8 a.m. We'll be trading that market live in real time tomorrow morning with all of our students. Now, moving to the S&P, we have a very similar scenario, and ultimately it's traded the exact same way, but now we have a flag. As you can see here today, the S&P, now this is pretty impressive. We run down, it's almost as if these markets are correlated right now. Now, kids, I need to talk about that for a second. I get email after email after email saying, Joe, what's your favorite correlation setup? And I always respond back the same thing. Make sure you don't make the mistake of confusing correlation for causation. Are these markets correlated right now? Sure, I guess you would say that. But where's the causation? Is one causing the other? That's the variable. And that's why I always tell new traders, be careful how much value you place in correlations. What you need to place more value on is causation. So everyone says, well, the E-minis are correlated. Well, that's great. How do I make money with that information? Right? It makes for great coffee talk. Sure, they're all correlated. Of course they're correlated. We live in a very efficient electronic trading environment right now. But what causes markets to move, right? If you can prove to me the S&P causes the NASDAQ or vice versa, or the Dow or the Russell, now we've got $1 million to make together. Good luck though, my friend. Okay? So remember, don't confuse correlation with causation, right? With causation. Okay? Bond markets causing equity markets. They're not correlated. There's a causation there. Anyways, let's keep going. As you can see here, just like crude, right? Downtrend, uptrend, and then swoo, what happened here? Now, you don't see this very often. Look at this. How many green candles do you see on the way down? 1, 2, and 3. That is crazy enough. This is the S&P we're talking about, right? I mean, you can't squeeze a tick here and there on the S&P if you tried. You want to really blow your mind? Look at those green candles. Look closely. We never even broke the high. What does that tell me? That tells me literally the buyers just simply dropped the mic and said, we're done, and left the building. Literally. Buyers just walked away from it. Right? I mean, you would have expected to see some buyers, right? Buy low, right, Joe? No. Buy low, right? No. No, they didn't even do that, right? They literally, this is probably just profit taking, right? That's all it is. Nobody even took a nibble back to the upside. That's pretty significant. Remember, this is a market that's going to make you take the bait to the upside and then jam it down your throat, right? This is the S&P we're talking about, right? This is a market where you have no room for error. So very, very impressive, right? I don't know what's more impressive, the fact that the bears took this so far or the bulls just simply, again, see ya, they just left the building. So clearly we're bearish, right? I think that's pretty easy to say. And this is one of those scenarios where we've got one leg down, 2 legs down, and this is now potentially a 3rd leg down. Now, what are we going to talk about on the euro? The euro today has 3 legs up. Okay, we're going to talk more about what the personality behind, what's actually happening with a 3rd leg. But you've got market makers, trend followers, and late adopters. Right now, you've got late adopters right now. This will be the weakest of the legs coming down, right? The first 2 legs are going to be the most aggressive. This 3rd one will be the weakest. Now, let's talk about this flag. Okay, here's a bear flag. Now, flag patterns, in my opinion, are the most challenging formations or patterns to trade. We know it's bearish. Why is it so challenging? Because of this darn bull channel. This bull channel is really confusing. It's confusing in a good way, right? It's a good confusing because what you're actually doing is you're looking to get the buyers actually thinking, well, I read somewhere that big drops equal big pops. Let's go buy this next pullback. Well, that's where we're going to look for them to fail. So remember what I talked about back on crude? How we said if price goes higher. Remember this on crude? Price goes higher. We don't know how high it will go, but we do know that when it pulls back, that's going to be a great selling opportunity. Right? Remember also, too, this is the tough one. That was the easy one. The tough one was if it goes lower, don't sell the low. Wait for price to come up. Let the buyers try to buy it up. If they fail, that's your sell, right? Okay, well, now this is another example of something very similar. But this one's going to be a little more challenging. This is going to be the hardest market of the day tomorrow, most likely. That big push down definitely has the bulls on their heels. But you can see, though, just a beautiful measured correction back higher, right? They try to buy the pullback. If they fail into that pullback, that's where you want to be selling. Now, that is the most reliable opportunity, is you wait for it to break down, come up, buyers will try to buy it, and you need that juice selling into their stop losses to get the price back down. That's the most reliable. But the problem is that oftentimes what happens is when it breaks down, it really breaks down. We don't want to buy this at the low of day. We want to buy it somewhere, we don't want to sell this at the low of day. We want to sell this somewhere up here. So what you want is you want it to break down, but not too far, and it can be difficult. This is a challenging area. do not sell the low, right? We talked about that in last night's newsletter. So what's the other option? What I hope happens is I hope that we get one more push higher. I hope that we get one more push higher, as I always refer to it. Let the bulls just wrap that noose right around their necks, and then after the measured push higher, that's where we get a much, it's got a lot more profit built into it this way, right? So that's what we're kind of hoping for tomorrow. Will we get it? We shall see. Definitely stick to the bear side. Again, as price goes higher, we're looking for buyers to fail, right? Selling into their stops. And of course, as price goes lower, that's the hard one, right? You don't want to sell the low price, okay? What you want to do is wait for it to come up, wait for the buyers to try to buy that pullback. They might be successful, but they're not, right? We want to sell into their failure. All right, guys. S&P is probably going to be the hard one for tomorrow, right? So wear your helmet. Last but not least here. Continuing here, though, with the yellow metal now here on gold. This is a good example of exactly the scenario that we kind of hoped the S&P would be in, right? It goes all the way up, measured correction, comes back. I hope the buyers take the bait, buy that pullback, and then you know exactly where those stops are going to be. This is literally a carbon copy of the S&P. It just doesn't look as pretty, right? This is a little more condensed. As you can see, gold looking also very, very similar. Trends up, then collapses right down through those lows. Lots of bearishness, leads into a bear flag. And again, you know there's going to be some buyers here that are going, man, all right, 50% pullback, let's buy this. And they might be successful. Let's be honest. I can't predict tomorrow, but I do know where, if they fail, I know where their stops are going to be, and that's all I need. All I need is that amount of room, right? They try to buy that pullback, selling down into it. All I need is just that little bit of room below there to get a nice profit target, remove the risk, and then hopefully we get the move to continue down to the ABCD. That will complete the bear flag, right? So again, you know what happens if price goes up, right? Fade the breakout, fade the pullback failure, right? If price goes down, be careful here. Selling at that low, wait for it to go up a little bit, wait for the short-term buyers to take the bait, and then that way you've got some stop losses to throw some juice into this thing and send it back to the low. And then at that point, we'll leave a final portion to run down to an ABCD. We may get hung up here because you're going to notice, if I look left, that 66.8 area, they're going to bounce most likely pretty hard here. So you may not be able to get to that 61.7. Conservative targets at 65 even, just ahead of that 61.7. If you want to let it run to 61.7, make sure you lock in some profit around 68, right? 68.7 here as it goes lower, right? So we tumble down, right? Lock that stop in place here, let it wiggle around here, and hopefully it punches through, right? Hopefully it punches through. That's your plan for gold. And then, boy, you got to give this market a little bit of a round of applause. Boy, this euro is on fire right now, right? Fire because they're basically burning their currency, right? I mean, again, do not ask me why the euro is going higher when they just lowered rates again into negative territory. You know why this is going higher, right? It's all dollar based. It's all based on the global economic picture. So if you think you're going to understand the why right now, good luck. Go back to Harvard School of Economics. Right? Literally, you're going to need more than a few degrees to understand all these markets. That's why I always tell people, forget the fundamentals. Are you a fundamental trader or are you a technical trader? Okay, you can't worship two gods at the same time, unfortunately, not to bring any gods into this video, but that's the bottom line. If you're a technical trader, turn off the news television, turn off the fundamentals. We're not trading value, right? I don't care about supply and demand. Come on. I'm trading emotions. I'm trading bad decisions. I'm trading fear and greed. I'm trading for aggressive little scalps and holding a position for a larger move. Right? If you're reading some economics book from 1983, newsflash, it didn't work in 09. It's not going to work again now for short-term day trading. And I can't even say much about long-term trading either. So stick to the fundamentals. If it doesn't make sense, perfect. Go to the chart. The chart always makes sense. right? Whenever I get confused what's happening in this world, I always go right back to the chart because it all seems to make sense on the candlesticks. So here we go with the euro. The euro is bullish this evening, but after 3 pushes higher in today's session, we expect the bulls to take profit and allow the sellers to take their turn for most likely the first half of tomorrow's session. Okay, we're going to look for buying opportunities, but we really got to be careful. We want to wait for a bearish correction. Now, here are those 3 legs. And by the way, guys, this is the 3rd time the euro's done this in the past week and a half. It's pretty impressive. Okay, especially a liquid market like the euro. This is not your natural gas, right, or your Aussie dollar. This is a liquid market. Leg 1, that's the market makers. Leg 2, those are the trend followers. And as you can see, leg 3 is really just a trap, right? That's all it was. Sellers tried taking it. Buyers buy into their stops. Leg 3 is the late adopters and all those crafty speculators that sent it higher. At this point, you are borderline foolish for not taking your profit at this point, right? Now, of course, I can never predict the future like anybody else can, but we know that when a market makes 3 legs up, everybody and their sister is long this market right now. And what happens when everyone is talking about the same thing? Get out of the way. If you didn't learn anything from 2008, 2009 housing crisis, right? When everybody around the water cooler is talking about, boy, did you see the euro? I'm still long the euro. Once you hear that around the office, that's when you know it's time to get out of this market. So right about now is when all the smart buyers who bought earlier in the day, they're taking their profit. So what are we going to do? We're going to let the sellers have their way with it. Now, aggressive sellers can look for unsuspecting victims right now. So let's say first, we can't be a buyer right here. So let's give the sellers a tip. What am I going to do if I'm a seller? Well, if I'm a seller, be aware you're playing with fire. This is a red-hot bullish market. So whatever you do, wear a helmet if you're going to be selling this market and treat everything as a scalp. I do not trust any runners. Take your money out of the market as fast as you can get it right now if you're a seller. But really the best thing to do would be look for some of these support areas, look for buyers to buy it, and then just sell into their stops, right? A quick first target, and then try to leave a runner down to another level of support. That's all you're going to really be able to do if you're a seller right now. Okay? After we make that 3rd leg higher, and it's pretty much a measured move too. I mean, if you look at it in terms of measured move, we have a little bit more gas left in the tank, right? If you were to look at it as a measured move here, right, we get a little bit more gas left in the tank. The problem is it's clearly 3 legs up, and I can't recommend buying this. You might see one more push up to that 1060 area, and if you do, that's when sellers again, right? That's where you really want to catch those buyers trying to buy that pullback to 1042 and sell into their stops. So if you're a seller right now, look for a new higher high and then sell into the failure of the buyers. And again, keep it close to the vest tomorrow if you're a seller, just because it is such a bullish market. The problem with trading counter to this trend right now is you don't know how far it's going to go, right? It may only give us an A, B, C, and then it might go up, right? So you don't want to have to make all your money by taking a big profit target on the way down. What we expect though is, for the buyers, we expect to see a measured correction. Now again, I can't predict this correction. All I know is that we're probably going to be inside this range. What typically happens after 3 legs up is we either collapse back down or we go range bound, right? So if we go range bound right now, this is where, again, it's got a bullish bias to it, but you got to be real careful until you see a nice deep correction, in my opinion, before you're really going to get the solid, reliable buying opportunities tomorrow. Okay, so if price goes higher, I can't recommend you touch it. If price goes higher here, I'm looking to trade into the failures of the buyers back down. If price goes lower, we're probably going to make a trading range out of this, right? 1,006 to 1,042, right? If it goes lower, again, I really have a hard time being a buyer right now. But the reality is you look for sellers. If you do want to buy this 1006, do it after fake breaks to the low, right? Seller failure, buy it back up. Okay, guys, makes sense? So if we're going to go lower and you want to be a buyer, again, pretty much the opposite of what I told the sellers. Wait for the sellers to try to sell into a retracement and then buy into their stops. That's the safest way to do it if we don't get a correction. If we get a nice strong correction before we open up tomorrow morning, then we look great. Then you're just looking for sellers to fail. That'll get you started. And then buy and pullbacks as long as they respect our levels of support. So bottom line right now, if we go higher, be careful being a buyer. I think the sellers have the edge if we go higher, selling into buyer failures. If we go lower, you're looking for a deep correction, right? I'd be looking down around this 0970 area, that type of deep correction, right? Then look for seller failure. That'll get you started into buying pullbacks from there. Okay, back to retest those highs. If we do end up just kind of sloughing around inside this trading range, it's a bull bias, right? Buy the lows, but because it's made 3 legs up, I would recommend you buy the lows using seller failures, right? Like any other range environment, okay? Just make sure you're careful if you're being a seller right now on that euro. Okay, we got a good plan on the euro. I think the only problem we're going to have tomorrow on the euro is if we don't get the correction, right? We may have to sit patient for one more day to pass before we really get the good buying opportunities until we get that correction. On the gold, again, difficult to tell how far we go. We might go a little bit higher here before we collapse back down. Bottom line, though, is right now we're looking for buyers to try and fail. Right, that'll be your next opportunity to be a buyer. The S&P definitely looking out to be the most challenging of these markets right now. Again, you guys know the plan for trading on a flag. I would love to see it get up here, fail on the pullback, and then give us a chance to sell it back down. If it goes lower, just don't sell that low of day. And then last but not least here on the crude, I think the crude's the easiest one of all 4 of these tonight. You know, it's a nice, easy trading range. We know exactly the areas we really want to wait, right? Get up around that 38 area, look for those buyers to fail, and then sell it right back down. Again, don't forget, if we do end up going range bound here, sell the highs, sell the highs, sell the highs. And then again, don't forget, you get the previous low of day, 36.42 and 30.59 as targets waiting for you below. Guys and gals, as always, thank you so much for being a part of the newsletter today. Don't forget, if you got a free moment, head over to schooloftrade.com, check out our free trial. I take a lot of pride in the fact that you're going to learn more with me on my trial than anywhere else on the interwebs. I can guarantee you that. We have a place for everyone to either kickstart their career or finally put the pieces together in the right scenario. Whether you're a beginner, intermediate, or advanced level trader, I would love to have the opportunity to work with you as a brand new student here at School of Trade. Don't forget, we've always got someone standing by 24/7 to give you guys a hand. If you got any questions, and I always appreciate it when you guys send me feedback. You can send me feedback to jj@schooloftrade.com. Also, share with a friend, and don't forget to give me a thumbs up on the YouTube video. Always appreciate you guys sending me your feedback. Now get out of here. You probably have some Christmas presents to shop for or wrap up, right? Or hide from the kids. I'll tell you, when I was a kid, I was the master at finding those presents. I used to unwrap the presents and wrap them back up. I used to take pictures of it. Yeah, back when there weren't digital pictures, right? You had to flop around. Anyways, it's a great time of the year. Hope you guys are having a great week with us so far. Tomorrow, we open up our trade room tomorrow morning at 8 a.m. Eastern Time. And again, as always, Monday through Thursday evening, we'll do the same newsletter again tomorrow. Be well out there. Be nice to each other, right? And try to enjoy the holiday season, right? I'm singing along to the Christmas music now. I must be getting old. My name is Joseph. I'll see you next time, guys and gals. Adios, amigos. Bye-bye for now.